Most traders believe they need a better strategy, a better indicator, a better entry model, a better risk-to-reward ratio. And while those things certainly matter, there is another problem quietly destroying trading performance every single day: distraction. The inability to focus deeply on what truly matters, the habit of constantly shifting attention from one thing to another, the urge to check social media, the urge to monitor 10 different markets, the urge to watch every candle, the urge to consume endless information. And over time, these distractions slowly weaken decision-making, discipline, and consistency. That is exactly what we are going to talk about today: how to reclaim focus as a trader, how to use deep work techniques to improve concentration, and how to protect your attention in a world designed to steal it. Because the truth is simple: a distracted trader is often an emotional trader. An emotional trader becomes an inconsistent trader, and an inconsistent trader struggles to achieve long-term success. By the end of this video, you will understand why focus is one of the most valuable skills in trading, why distractions create costly mistakes, and what practical techniques can help you protect your attention during trading sessions. And if you want more trading psychology lessons focused on discipline, patience, and consistency, consider subscribing to Bull Mindset. This channel is dedicated to helping traders develop the mindset needed for long-term success. Now, let us begin. Think about how most people use technology today: notifications, messages, social media, news alerts, videos, emails, constant stimulation. Most people switch attention dozens or even hundreds of times throughout the day. And the problem is that attention switching comes with a cost. Every time your focus moves from one task to another, your brain needs time to readjust. That adjustment consumes mental energy. Over time, focus becomes fragmented. Mental clarity decreases. Decision quality declines. Now think about trading. Trading requires concentration. Trading requires patience. Trading requires observation. Trading requires emotional control. These skills become much harder when attention is constantly interrupted. This is why focus is not just a productivity skill. It is a trading skill. Now let us talk about what deep work means. Deep work is the ability to focus completely on a single task without distraction. No interruptions, no multitasking, no unnecessary stimulation, just focused attention directed toward one important objective. Professional athletes experience this. Professional musicians experience this. Top performers in every field experience this. And successful traders benefit from it as well. Because trading is not simply about information, it is about processing information effectively. And processing information effectively requires attention. Now let us discuss one of the biggest myths in trading: the myth of multitasking. Many traders believe monitoring multiple charts, multiple time frames, multiple news sources, multiple social media feeds, and multiple trading communities simultaneously makes them more informed. In reality, it often makes them less effective, because the human brain is not designed to focus deeply on many things at the same time. What we call multitasking is often rapid task switching, and rapid task switching creates mental fatigue. The result is simple: less focus, more mistakes, lower quality decisions. Now imagine two traders. The first trader monitors 20 charts, reads social media constantly, checks trading groups every few minutes, watches financial news all day, and constantly jumps between tasks. The second trader focuses on a small number of markets, has a clear plan, limits distractions, and concentrates on what matters most. Which trader is more likely to make disciplined decisions? The answer is obvious. Focus creates clarity. Clarity creates confidence. Confidence creates consistency. Now let us talk about another important truth. Distraction often disguises itself as productivity. This is dangerous. A trader might spend hours watching videos, reading articles, scanning markets, following influencers, and feel productive. But activity is not the same as progress. Many traders consume information endlessly without improving execution. Professional traders understand something important. At some point, learning must become doing. At some point, analysis must become execution. At some point, information must become action, and that requires focus. Now let us discuss attention residue. This concept is extremely important. Attention residue occurs when part of your mind remains focused on a previous task even after moving to a new one. Imagine checking social media while trading. Even after closing the app, part of your attention remains attached to what you saw. The same thing happens with messages, emails, news headlines, conversations. Each distraction leaves behind a small amount of mental residue, and those small pieces accumulate. Eventually, focus becomes fragmented. This is one reason why many traders struggle to maintain concentration for long periods. Now let us talk about emotional distractions. Not all distractions come from technology. Some distractions come from within. Fear, greed, frustration, impatience. These emotions compete for attention. Imagine watching a trade move against you. Suddenly, your focus shifts. Instead of objectively analyzing the market, you become emotionally attached to the outcome. Your attention narrows. Your thinking becomes less flexible, and decision quality often declines. This is why emotional regulation and focus are closely connected. A calm mind focuses better. A distracted emotional mind struggles to focus. Now let us discuss one of the most powerful habits used by high performers: creating focus rituals. A focus ritual is a routine that signals to the brain that it is time to work. Professional athletes warm up before competition. Musicians prepare before performing. Successful traders can benefit from the same approach. Imagine beginning each trading session the same way: reviewing key levels, reviewing risk limits, taking a few deep breaths, eliminating distractions, and mentally committing to the process. Over time, the brain associates this routine with focused performance, and focus becomes easier. Now let us talk about environment. Environment influences attention more than many people realize. A cluttered workspace often creates a cluttered mind. Constant notifications create constant interruptions. Background distractions reduce concentration. Professional traders often design environments that support focus. Clean desks, limited distractions, clear routines, simple setups. Because environment shapes behavior, and behavior shapes results. Now let us discuss another important concept: the difference between reacting and observing. Many traders spend the entire trading session reacting to candles, reacting to headlines, reacting to social media, reacting to opinions. Professional traders spend more time observing. Observation creates patience. Observation creates objectivity. Observation creates discipline. The more reactive you become, the more emotional your trading becomes. The more observant you become, the more rational your trading becomes. Now let us talk about information overload. Modern traders have access to more information than any generation before them. News, data, charts, indicators, videos, podcasts, communities, courses. The challenge is no longer finding information. The challenge is filtering information. Too much information often creates confusion rather than clarity, and confusion creates hesitation. Professional traders understand this. They focus on relevant information. They ignore unnecessary noise. They simplify rather than complicate. Now let us discuss another powerful idea. Focus is a limited resource. Just like capital, just like energy, just like time. The more carelessly you spend it, the less remains available when important decisions must be made. This is why successful traders protect attention aggressively. They understand attention is valuable. Every distraction has a cost. Every interruption has a cost. Every unnecessary task has a cost. And over time, those costs accumulate. If this lesson is helping you understand trading psychology at a deeper level, consider subscribing to Bull Mindset, because mastering focus is one of the most overlooked skills in trading. Now, let us talk about why many traders struggle to focus. The answer is often simple. They have trained themselves to be distracted. Years of constant notifications, years of rapid content consumption, years of multitasking. These habits condition the brain to seek stimulation constantly. Deep focus feels uncomfortable at first. Patience feels difficult. Silence feels strange. But with practice, focus becomes stronger. Just like a muscle, the more you train it, the stronger it becomes. Now let us discuss one final idea before moving into real-world examples in part 2. Professional traders do not rely on motivation to stay focused. They rely on systems. Motivation changes daily. Systems create consistency. A trader who depends on motivation will struggle whenever motivation disappears. A trader who builds routines can perform even when motivation is low. And that is one of the biggest differences between amateurs and professionals. Professionals create environments, routines, and habits that make focus easier. Because they understand something important. Success in trading is rarely about doing more. It is usually about doing fewer things with greater focus. Now let us continue by looking at some real trading examples. Imagine a trader who begins the day with a clear plan. The trader identifies key levels. Risk is defined. The strategy is understood. Everything looks good. But during the trading session, the trader constantly checks social media. Every few minutes, attention shifts away from the chart. One trader says the market will go up. Another says the market will crash. Someone posts a profitable trade. Someone shares a prediction. Slowly, the trader's confidence begins to weaken. The original plan becomes less important. External opinions become more influential. Eventually, the trader abandons the setup that was originally planned. The market moves exactly as expected. The missed opportunity creates frustration. The frustration creates emotional decisions, and emotional decisions create mistakes. The problem was not strategy. The problem was attention. Now imagine another trader. This trader begins the session with a clear routine. The trading plan is prepared. The key levels are identified. The phone is placed away from the desk. Social media is closed. Notifications are disabled. The trader focuses only on the information necessary for execution. Hours pass. Patience remains intact. Focus remains strong. Decision quality remains high. The difference is not intelligence. The difference is environment and attention management. Now let us look at another example. Imagine a trader monitoring 15 different markets: Forex pairs, crypto assets, stock indices, commodities. Everything is moving. Everything seems important. The trader constantly jumps between charts. Attention becomes scattered. Opportunities are missed. Analysis becomes rushed. Decision quality declines. Now imagine another trader focusing on only 2 or 3 markets. The trader knows those markets deeply, understands their behavior, tracks them consistently. The trader's attention remains concentrated. The quality of observation improves. The quality of decisions improves. This is the power of focused attention. Now let us move into practical deep work techniques that traders can use immediately. The first technique is called time blocking. This technique is simple but powerful. Instead of allowing attention to move randomly, specific periods are assigned to specific tasks. Market preparation, chart analysis, trade execution, review, learning. Each activity has its own dedicated time. This reduces mental chaos. The brain performs better when expectations are clear. When time is structured, focus becomes easier. The second technique is what I call the single chart rule. During active trading periods, focus only on the charts that truly matter. Do not constantly search for new opportunities. Do not jump from market to market. Stay with your plan. Stay with your focus. This reduces attention fragmentation. And attention fragmentation is one of the biggest enemies of disciplined trading. The third technique is creating distraction-free zones. During trading hours, remove unnecessary interruptions. Silence notifications. Close unused browser tabs. Avoid social media. Avoid unrelated conversations. Create an environment that supports concentration, because focus is easier when distractions are removed before they appear. Now let us discuss mental frameworks. The first framework is called attention as capital. Most traders protect money, but few traders protect attention. Think about attention the same way you think about trading capital. Spend it wisely. Protect it carefully. Avoid unnecessary losses. Every distraction is a withdrawal from your mental account. Every interruption reduces available focus. When traders begin viewing attention as a valuable asset, behavior starts changing. The second framework is quality over quantity. Many traders believe success comes from doing more. More analysis, more indicators, more charts, more information, more screen time. Professional traders often discover the opposite. Success frequently comes from eliminating unnecessary complexity. The goal is not maximum activity. The goal is maximum effectiveness. The third framework is deliberate observation. Instead of constantly reacting, learn to observe. Observe market behavior. Observe emotions. Observe decision-making. Observation creates awareness. Awareness creates control. And control creates consistency. Now let us discuss practical focus-building exercises. The first exercise is 5-minute concentration training. Before each trading session, focus on a single object for 5 minutes. Your breathing, a point on the wall, a chart. The goal is simple. Whenever attention wanders, gently bring it back. This trains the ability to maintain focus, and over time, concentration improves. The second exercise is distraction awareness journaling. For 1 week, record every major distraction during trading sessions. Social media, messages, news, emotional thoughts, anything that breaks concentration. Most traders are surprised by how frequently attention shifts. Awareness creates improvement. What gets measured gets improved. The third exercise is post-session reflection. After trading, ask yourself 3 questions. What improved my focus today? What weakened my focus today? What can I improve tomorrow? These simple questions build self-awareness. And self-awareness is one of the foundations of trading psychology. Now let us discuss another important topic: mental recovery. Focus cannot be maintained endlessly. Even professional performers need recovery periods. The brain requires rest. The mind requires recovery. This is why breaks are important. This is why sleep matters. This is why physical health matters. Many traders try to solve psychological problems with more effort. Sometimes the solution is recovery. A tired brain struggles to focus. A rested brain performs better. Professional traders understand this. They respect mental energy. They understand that attention is finite, and they manage it carefully. Now let us discuss something many traders overlook: boredom. Boredom is often responsible for poor decisions. A trader waits. Nothing happens. The market becomes quiet. Patience becomes difficult. The trader starts looking for stimulation. This is when unnecessary trades appear. This is when discipline weakens. This is when mistakes occur. Professional traders learn to become comfortable with boredom. They understand that waiting is part of the job. They understand that activity is not the goal. Quality execution is the goal. Learning to sit patiently is a valuable trading skill. Now let us talk about consistency. Consistency is not built from occasional bursts of focus. Consistency is built from daily habits. Small actions repeated over time. Focused preparation. Focused execution. Focused review. These habits create long-term results. Many traders search for dramatic breakthroughs. Professional traders build simple routines, and those routines compound over time. Now, let us move toward the final lesson. The market is full of distractions: news headlines, opinions, predictions, social media, noise. The trader who reacts to everything often becomes overwhelmed. The trader who focuses on what matters becomes effective. Remember this: focus is not about doing more. Focus is about doing less with greater intention. It is about protecting attention, protecting mental energy, protecting discipline, and protecting decision quality. Every great trader eventually learns this lesson. Success is not only about knowledge. Success is also about attention, because knowledge without focus often produces poor results. But knowledge combined with focus creates powerful execution. So as you move forward, ask yourself a simple question: what deserves my attention, and what is stealing it? The answer to that question may transform your trading performance. The trader who masters focus gains a powerful advantage, not because they know more, but because they can consistently apply what they already know. And that consistency is where long-term success is built. If you found value in this lesson, subscribe to Bull Mindset. Keep strengthening your focus. Keep protecting your attention. Keep improving your discipline. And remember, every great trading result begins with a focused mind. Thank you for watching, and I will see you in the next Bull Mindset video. Thanks for watching.